Hello everyone, good evening, or shall I say good afternoon. Welcome to the live trade room where we're looking to trade the US Open. Sorry, I've got this squawk going on in my ear hole. So over the next hour, what you can experience from us is where we go through everything we need to do in order to look for some high probability trading opportunities across some of the world's largest markets, from your foreign exchange to your commodity markets like oil and gold, and also to our global indice markets as well, like the S&P and the FTSE and things like that. So we'll be preparing for the US Open. So let's start then with our risk warning currently up on screen. Please take a brief moment to familiarize yourself with our risk warning. Of course, it's important that you as a trader fully understand and appreciate the risks involved in trading the financial markets. It's from that ability to manage risk is really what generates consistent returns. So we're not boom and bust traders, we're consistent growth over a period of time. So without further ado then, let's get straight into these markets. We do have important news out now, which I'll just touch upon. So if I just bring up Forex Factory just up on screen here. So it's important when we trade financial markets that we do have an understanding of some of the major news events really in these markets. So as you can see, not a huge amount to deal with. In fact, it's been a pretty light trading week as far as the news is concerned. We had some very interesting retail sales figures yesterday. Look at the forecast, which is for the retail sales in the US, 1.1, and we saw a core sales figure of 5.9 and a retail sales figure of 5.3. Largely that is pretty much down to the fact that the US government gave people checks, so that it was in some form of COVID response stimulus really, and that money is clearly being spent through retail. So that's the good news for the US economy. As a result, the dollar strengthened somewhat. And what we have for today, so anyone trading the Aussie dollar, we had marginally better than expected employment data coming out of the Australian, coming out of the Aussie dollar. So we'll have a look at the Aussie dollar now in just a second. As you can see, and we really look for sort of major impact news events, and you can see there's not an awful lot to have to deal with. However, we do have the ECB monetary policy meeting accounts, and I'll give you an update on that shortly, because what I'm getting a feed in my ear with updates in terms of real-time developments and changes that are going on. So I'll be updating you as well. We will be playing this live, I believe, from next week onwards, so you'll be able to sort of hear it all firsthand. And actually you'll be able to hopefully secure the squawk as well if it's something you would like to benefit from. We've got crude oil inventories. The reason why this particular event is quite important is the fact that we're currently in a crude oil trade at the moment. So you're probably fully aware. Oh, okay. Yeah, sorry. It should actually have it here, if I'm not mistaken. I believe it's playing automatically, but sorry, bear with me a second. We do have okay. Oh right, okay, so it was just the actual volume of it then. Unfortunately I can't hear it myself, so guys, do bear with us. We're still ironing out certain technical difficulties with sound and image and things like that, so we're hopeful we'll have a pretty set formula from next week onwards with these broadcasts. And I'm just looking at multiple screens off this main screen that I'm speaking to you through as well. but I believe you can hear a little bit of background noise, which is good. So we're trialing and testing a few different things. And of course, we want this to be as interactive as possible. So if you do have any questions whatsoever, feel free to post them into the chat box, and we'll be happy to sort of have a look at those questions for you. Okay. So we've got this news out from the ECB now in just a moment, and it's the monetary policy meeting accounts. So we'll see if that has any impact at all on the euro, because we're in a few euro-related trades. Yes, there is. If you can't hear it, that's probably good news, but yeah, there is. Okay, so yeah, sorry, I was just talking about crude oil inventories. So we're expecting a negative number. If I just share the chart here, we were expecting last week a similar kind of number, really. We're expecting minus 0.9 barrels. We saw a very significant figure of minus 6.6. That's likely to be extended. We're only expecting a minus 2.1, and with the issues going on in Texas at the moment, with the weather conditions, the fact that the oil wells are freezing up, and it's really impacting the supply of oil in the US, it's always likely to push prices to the upside as far as crude oil is concerned. So we would anticipate a larger number, so a larger negative number than the minus 2.1. So we'll see if that's the case. If it is significantly larger than the minus 2.1 figure that you can see currently up on screen, then it's probably likely to push prices for crude oil even further to the upside. So hopefully we're already in the trade, so we'll have a look at the trades now in just a moment. And that's really the major news events really for the day. We've got the Philly Fed manufacturing index. So manufacturing has been progressing, quite nicely, sort of maintaining, I suppose, a stance of growth and continual expansion. So manufacturing is kind of a positive indicator in the US. We'll have a look at these manufacturing and services data. We'll be having a look at it tonight in quite some detail with our traders in our trade plan webinar that we have at 9 o'clock every evening. So let's get up these charts then, the all-important charts, and these are the trades and the markets that we were looking at from last night's webinar. So if I just So if I just get up my pen and I'll talk you through some of the analysis here that we're looking at. It's looked like the euro has found a little bit of strength, but I'll come back to what's kind of going on in these markets in just a moment. It's always worth just taking note and seeing where are we at with regards to the indice markets, because the risk on, risk off trade has been really important for these markets. So, we're very close to all-time highs yet again. We are getting a bit of rollover price action. The orange, or should I say the golden line here at the top represents an all-time high, clearly in an uptrend. And today we've got a little bit of sort of softening really, but prices are generally maintained. So although we can, if we look across these indice markets in a bit more detail, you can see there's a risk risk-off aspect to this, and ironically, we would expect the dollar to pretty much strengthen. We didn't see much reaction to meeting and breaking through all-time highs recently in some of the safe haven assets, like we didn't see the price of gold increase, we didn't see the yen appreciate to any great extent. So the traditional, or the Swiss franc for that matter, so the traditional safe havens are really not in tandem as such. And what we started to see was the dollar strength trade begin to kick in once more. So we've got the Dow Jones, so we can firmly say really that when we're looking at these markets, we're firmly in a risk-off market condition. So the reality is, what does that mean for the rest of the markets? So let's look through one of these, each of these one at a time. So we're currently selling the euro dollar to the downside, and just looking at price action really over that particular news event. We're just lurking around within this little zone here, and if I just take that off and we just zoom out a little bit more, you can see a little bit more of information here. Let's look at a slightly bigger time frame. So it's important to know kind of where we're at with this market. So we had been previously in a bit of an uptrend. We'd moved sideways for quite some time. We'd already tried to sell this market once at that point, reversed quite significantly, and then we just got a little bit of an impulsive move to the upside. So it should be game on to the upside, although that particular trade failed. And then, as prices always do, they revert, they move back to previous levels of support, and then we saw the real move, which was to the downside. Now our bias is still to the downside, but what we got to sort of take into account is that markets, they don't move from A to B in a linear fashion. We don't see this in financial markets. What we see, of course, which is far more likely from A to B, is the fact that markets move up. We get pullbacks, we get the extension move, we get another pullback, normally in and around to levels of support resistance, and we get that type of price action. So we can all agree that that's generally what we see in these markets. So if we experience one of these pullbacks, then that's part and parcel of trading these financial markets. So we don't expect to get to A to B without any. So we don't expect to. Okay, sorry. So what we can do is we can tolerate this. This is the move to the downside. Our bias is very much lower. So then we would just do our analysis and suggest, right, well, at what price is this market likely to bounce back to? We would look at this and say the 2080. We're getting very close to the 2080 now. We're sort of gathering a little bit of, there's a bit of a ceiling being created around this 2075, which is enough. If it doesn't quite get up to the 2080 level, then that's fine. It's only 5 pips. For a market of this size, that is nothing. It's practically nothing. Okay, so what we're seeing is the market creates a bit of a floor, and then we start seeing the reversal trade kick in. So we start seeing some buyers pushing this price to the upside, coming back to strong levels of previous support, which now becomes resistance. So if this market does squeeze a little bit higher, but what we eventually want to see is a high being created, and we want to see the next leg push to the downside. Where we come unstuck, if we're traders that want to let our winners run, and we see this type of price action where it starts to move sideways for a prolonged period of time, what it does is it opens the door to the buyers. But you want to look at these levels in these markets where we can find some resistance, and you want prices to hold around that level, because you want to see that next leg to the downside. Remember, markets move in that fashion, so you have to put up with the pullback if your bias is firmly to the downside, which our bias is. There's fundamental sentiment reasons. Okay, I don't know if that improves things at all. Let me double check. Okay, sorry, bear with me just a moment. Hopefully that's a little bit better. We're just integrating a little bit of background music there as well, because there will be times where we'll be focusing on price action charts and getting into trades. So that's our analysis to the downside. So it just needs to play out. The pullback needs to play itself out. Yeah, good stuff. Okay, we're slowly getting there, guys. We're slowly getting there. So that's really our plan for this market. What's happening with this? Right, there we go. So it's squeezing higher even as we speak. So we just need to monitor this trade and see how we get on with it. It's similar analysis really in the dollar Swiss, and we're currently experiencing the pullback. So we failed to sort of see the price push higher really to any great extent. So we just had this little bit of rollover price action. So we do need to be a little bit patient with these types of trades, especially the euro dollar and the dollar Swiss. Elsewhere, what's going on with the dollar? It's actually selling off. So we are seeing the indice market soften, and we're seeing the dollar soften as well, and we're seeing mild. When we look at the yen, it's really apart from the pound, it's very mild strengthening. So we're not really seeing much capital move into the areas in which we would anticipate, especially if we're in this risk-off market condition. The pound is just continuing its move to the upside, so it's a really important trade. We were looking for this market to just continue its move further to the downside and maybe get in at a slightly lower price like the 138, but as you can see, we opened and prices have accelerated actually above the monthly high. So when you see price action like this, it's not over by any stretch. It's just the beginning of potentially a further move to the upside. So we want to see prices breaking above monthly highs, and the red lines on your chart generally are the monthly lows. Okay, we don't have the monthly low in here for some reason, so let's put it in. Oh, is it behind this? No, it's not. Okay, so we'll change this color to red. This signifies, yeah, this would be the sorry, I'm not too sure what these two lines refer to now. So we've got the monthly low, which is this month's low, as opposed to last month's low. Monthly high is way further back down here, so I'm going to just delete a few of these. Okay, Hang on a second, bear with me. Right, let's start this again. So this is an intraday monthly low. This is so we work off January's lows and highs, and we've continued really quite nicely on that to the upside, and prices are continuing to break further higher. So so just focusing on the US dollar, it's softening. So we're getting this annoying price action which can strengthen one day and it can reverse the next. So it's a bit frustrating. We've got the dollar pretty much weakening across the board now today. So that's the market condition. So our focus very well may become the British pound. We're seeing these prices make new highs just in here. So I'll take that. Okay, so we've had the structural failure trade actually to the downside, and we just found some support around these lows, the 145.54, and only now are we just looking to break above that 147.50 level. So this would be your breakout trade. So we'll come back to this in just a moment. So really the pound is and needs to be our focus. We're getting a bit of that retracement trade in the gold sell. So a bit of capital coming into gold, which is obviously your safe haven. Crude oil, we really want to stay in this to the upside. So let me just change this. So we have our entry price in here, and we have our stop loss below the 3-day low now, and prices are above that. A little bit of hesitation like we saw 2 days ago, but we'd expect this market to continue further to the upside. So we'll have a look at that, and we'll see what's going on with the S&P. So actually we're going to have a look at the pound, we're going to have a look at the oil and the S&P 500, and we are rolling around to the top of the hour, which is the cash open, and it will be important to keep an eye on the euro dollar. We've just seen the euro dollar just touch off the 120.81, so this ticks that pullback box. If we look at it on the daily time frame, you can see it's a level of support. We do have another level just marginally higher. So now we want to see if this price can hold around this level. We want to put the doubt in the minds of those that are selling these markets. We want to put a doubt in the mind of those looking to buy the euro versus the dollar. And that's ultimately what trading is. It's a battleground between buyers and sellers. We say it to our traders all the time. And what we need to do is to try and get ourselves on the right side of that discussion. So we're breaking to the upside and just reversing back, as you can see. So let's see how we get on with this particular trade. So in terms of our trade plan for the 1 o'clock cash open, we're looking at the euro dollar to the upside. Ultimately to the downside. So let's see if we get, we'll just amend this. So it's the 2061. 2061. So that's the level that we'd want this market to fail, reject this 120.83. Those people not in that trade yet, this would be a viable trading opportunity below the 120.61 level, but we're just gonna monitor the euro dollar as best we can. So let's start with our breakout trade. So we're continuing to see this market move to the upside. Let's have a look at it in a bit more detail. So this is a really strong accelerated move. The structural failure to the upside was a little bit further back. We're looking for a little bit of dollar strength, and what we're seeing is kind of dollar weakness across the board. So let's see how prices interact and behave around these levels. So what we have with the pound dollar trade, the 39 is the 39.50. So we're looking for a breakout buy trade above the 39.50 level. Certainly it'd be interesting to see if prices hold. We're watching the euro dollar and the pound dollar, although we do quite like the pound to continue to strengthen. Very similar situation. We've had this little structural failure trade just a few hours ago. We've had this market just break to the upside now. So this is a breakout trade. It's no longer a pullback trade, it's a breakout trade. So we sort of classify each trading opportunity. So it's a breakout buy trade above. It's the 147.50. 147.50. So that's what this trade would represent. It's green in nature, so so we put this up here. So we're seeing how the euro dollar interacts with that 120.83, and what we'd like to see it happen is this rollover and break back below the 120.61. Then there's a viable sell trade. The dollar yen, the pound, because if we're looking for dollar strength, then we're looking to see if this market can close above that 139.50. So we'll come back to that. Same situation with the pound yen. What I'm going to do is put the euro pound trade in here. So we've had a nice accelerated move to the downside for the euro pound. So this has been a really nice sell trade for us. So our entry was back up here, and our stop loss was just above this strong level of resistance, and then we started to see prices grind but continue their move to the downside. So now we can conduct sort of technical analysis like so, and suggest that we're now in this type of channel. And we're actually sort of breaking, we're at those sort of lower levels now, so we can expect a little bit of a pullback in this. But once you're in these types of trends, we would like to try to stay with them if we possibly can. So I mean, pullback wise, you'd want to be looking to get in at the 86.80 level. So let's post that then. So we're looking for a pullback sell trade. The high probability aspect of this trade is the 86.80. So we're looking for a pullback sell trade at 86.80. 86.80, much lower than our previous pullback sell trade. 86.80. Yeah, just want to confirm that that price there is correct. So what you get up on screen is our high probability trading opportunities, and just a little bit of I suppose an update really in terms of what we're looking to see happen with each of these markets. It's important we don't just trade foreign exchange. We don't want to just sort of ignore what's going on in other markets. It very much informs what decisions we can make, like I alluded to, the risk on, risk off nature of the global indice markets. It can give us some really useful information regarding the yen, regarding the gold market, regarding the dollar, the Swiss franc. We want to see where capital's flowing. It's the flow of capital, and it's the commitment of others that we're interested in, and looking to trade in line with that is really what our aims and objectives are as traders. And of course, to conduct our fundamental analysis, have an understanding of the sentiment behind these markets, and be able to sort of technically get in and out of these trades. And don't forget, the reasons why we get into trades should also become similar reasons as to why you get out of the trade. So again, we want to cut a loser short, we want to let our winners run. And letting our winners run is the really hard bit for traders to get their heads around. Especially if you've taken a few back-to-back losing trades. It's quite hard to have that discipline in your approach to actually be brave to let it go. But you want to see certain things happen. You want the markets to perform as per your expectations as an individual. You don't want to be pushed around by these markets. You don't want markets to be flying higher and for you to be jumping into the upside, and then for them to turn around and for you to be looking for selling opportunities. That's you being manipulated by the markets. And we've always been advocates of stepping back from that and actually taking control of your own decision making and allowing the markets to come to us. So we want price to act and behave in a certain manner at certain prices, and if that's the case, then they fulfill the criteria for us to get into that trade. And if that's not the case, then we generally sit on our hands and be patient and try and wait for the better opportunity to come along. Now, with sort of market volatility and some of these erratic markets over the last number of months, that's been quite challenging to do that, and especially letting these trades run has been a challenging environment. Just for traders generally, that's been sort of the overriding feedback that we're getting from many of our own traders. It's quite a challenging environment right now, but what we want to do and what we help our traders with is having a plan for these markets is really important. Know which markets you want to narrow down and focus on. If you're sort of switching from market to market, on an hourly basis, you're going to find it quite difficult to stick with. And don't get me wrong, I did it myself. I'm a retail trader like many of you guys. So personally, from a personal experience, I've been down that road before, and it's not a great place to be in terms of trade selection. What do we focus on? Why do we focus on it? Well, in actual fact, for us, we do that the night before. We do that at 9 o'clock as the markets close for the trading day, and that allows us to make some disciplined, coherent, objective decisions in these markets, and all those things are really quite important. Okay, so we've got this extended bit of price action here. It has moved some distance, so we're talking about up here at the 147.50. So we're talking about 65 pip explosive move to the upside. Okay, good. Okay, so I'm just going to see what the latest update is on the markets. Okay, so I'll fill you in on kind of updates as we go. So the backdrop is we're in a sort of a risk-off market condition. We would expect the dollar to actually strengthen somewhat if we look at sort of recent correlations, but that's not happening. The yen is strengthening on a very marginal basis. Same too with gold. Just to touch upon sort of decision making really, and I suppose leveraging our experience, I guess. But when you look at a market like the euro yen, if we buy at this high, the 147.54 level, we're getting into this market, 65, 70 pips higher than the initial breakout trade, if that was your bias to the upside. So really, it's probably worth waiting for that little pullback trading opportunity. So it remains to be seen what that looks like. We've got this little breakout level here, the 38.76. We're now up at the 39.55. So we're up sort of about 80 pips higher. And generally speaking, in situations like this, we'd like to get in on the pullback if we possibly could. But that means this market coming back a hell of a long way. So alternatively, our approach could be more around extending to the upside, and then sort of having to be patient and just wait for a constructive pullback into this level, and getting this market moving to the upside. So something like that, because what we have is, let's say we get into this trade here, we get in a buy and we just buy the level. We'd have to look for a stop loss, and we'd be talking about a stop loss way down here. So what, 100 pips lower? No, it'd be 130 pips lower. And then we've got to say, from a positive risk reward perspective, if we're looking for a 2-3% return on that trade, if we risk 1% and we're looking for a 2% return, we're talking about this market needing to move 240, 50 pips to the upside, and the chances of that happening are actually quite slim. So if we wait, and we have to be patient for this, if the market pushes higher and we get that little pullback trade and we can put a stop loss underneath there and look to get into the upside, then we might be looking at let's say a 30 pip stop loss, which is looking for a 2 or 3% return on this particular trade. You could be looking at prices up at like 140, 140.50 levels, something like that would be a really sizable return. So you always have to weigh up not just the entry side of it, but the risk management side of things. So that's why this trade getting in at this price is a bit tough. So it is a breakout buy trade above that 39.50. I tell you what, let's take that word breakout out of the equation, because that implies that we would need to get into it. Buy trade above the 39.50. So that just implies that we're looking to buy it above that level, but what we'd like to see is a little 20-30 pip push higher, followed by a bit of a reversal, and then perhaps get in. We would be actually offside if we got into the pound dollar to the upside and we're already in the euro dollar to the downside. It would then become a bit of a hedge trade. Nothing wrong with that. you know, if you can take a 1% winner on the pound dollar strength trade, and we can sort of hang in there as far as the euro dollars trade is concerned, and maybe capture a 1% return on that, or a 2%, then all of a sudden you know you can make money out of hedging as well. So the pound yen, it's again just for consistency purposes, I'll take out the word breakout. So it's just really a buy trade above that 147.50 level. So some of these markets, they do have key decisions to be made. We're probably likely to get a bit of a pullback into euro pound, as you can see. We would like to see a pullback because our decision making is actually an awful lot easier. If prices from here, if they come back to this level and they sort of, we get a bit of indecision around this level, it's actually an easier trading decision, because we can say if our entry is here, you know, we can use this level here as a technical stop loss, let's say in around this slight zone in here. So the 38.20, let's say, and our entry would be 38.80 and the 38.20. So we're talking about a 60 pip stop loss. So that 60 pip there would be something for us to feature in our risk management approach. And then we could look to the upside and think, right, well, you know, we're talking about positive 1-to-1 risk reward ratio. If prices just get up into this, back into this little region here, which is absolutely fine. And then if we add sort of 60 pips to the upside here, so we're looking at the 39.55. So let's say we get prices up to the 140. If we break the 140 level, you know, we're talking about plus so we risk 1% to actually generate a 2% return. So that's a positive risk reward trade if prices get up to the 140.10. Is that price there? Is it realistic? We would argue yes, it is, from the fact that this market is in an uptrend, clearly defined. So you're all of a sudden, because you've made a slightly different set of decisions, you can work out whether the trade is viable. You know, just comparing that contrast from getting in now, putting a stop loss way back here. You know, you'd need to get this price up to 140.80, 140.90 to even get your risk back. 1-to-1 positive, a 1-to-1 risk reward for the trade. So you can see straight away you can make 2% with prices getting up to 40.10, or you could, well, okay, let's 3%, let's say up to 40.70, 1% up to 40.80 with this type of trade. So so do bear that in mind. The euro dollar is now close to breaking above that 20.80 level. Let's see if it stays above that level as things currently stand. We've got some employment data due out pretty shortly, in about 15 minutes, so that'd be worth keeping an eye out for. The euro pound, you know, doesn't really want to stop, and that's just the pound generally, really. Let's have a look at this on the daily time frame, because so we had a small bit, we didn't get any sort of turnaround signal to any great extent. Okay, if you were looking for that turnaround trade this morning, you would have captured it 2, 4, 6 sort of 6 hours ago. Okay, so so 6 hours ago was obviously pre-European Open. Okay, I'm just getting some market updates. So it's like a bullish engulfing now, nearly. So that's the dilemma. All moves are not necessarily Janet Yellen, the new Treasury Secretary, will be speaking on television later today. So the markets will be watching carefully to see, how the Treasury will be looking to respond to the economy. So really, today's markets is all about the British pound. It just remains to be seen whether the euro will maintain its strength against the US dollar, because it's not performing, because it's weak elsewhere. It's weak against the pound. So the euro itself is not that strong. Okay, well, we'll have a look into these news events now in just a moment. The 1:30 news events. So the yen trades just need to give us that little pullback opportunity. Excuse me. The British pound trade needs to give us that pullback opportunity, and it doesn't look like it's willing to do so. Not just yet, anyway. Okay. Okay, just sharing these this news event, which is due out now. There's a number of US dollar data points got the manufacturing number, building, housing starts. Unemployment claims is probably the one that will be of most interest. That in the manufacturing is manufacturing. You know, what sort of state is manufacturing right now, and the unemployment claims, are they going up or are they going down? So there's this sort of mild improvement in the number of people that are signing on for unemployment. So we'll see, and what we're looking really for is the deviation in that number as well. Like, it's a mild event, so we wouldn't be expecting, you know, wholesale changes, except what we're seeing from a market perspective is this market is currently at a strong level of resistance, the 120.80 level. So really we're very interested to see if this level holds. You know, these R's just signify reversal. Any questions, feel free to post them into the chat box. And this level down here is kind of a level of support. It's just a lower trend line. So resistance when prices are coming from below, and support when prices are coming from above. The crude oil, we're looking at it on a daily time frame just purely because we want to try and stay in this trade just purely because of the fundamentals and the sentiment behind crude oil. So we'd expect these prices to continue further to the upside. Of course, not today necessarily. You know, we're having a bit of a pause like we saw 2 days ago, but we'll see how this, we have crude oil inventories out later on, so that might be a surprising trade to the upside. So we want to keep the option open if we can. And then the S&P, if we just have a look at it on like the 4 hour. You know, that's the state of play really on the 4 hour chart, and we could look at it even in the 1 hour. So we're firmly, with regards to the S&P 500, we're firmly trading inside this little range in here. So, you know, markets are, it is a constant battleground. Like, the game changer to the downside is the 39.02 for the S&P. The 39.40 is the level to the upside. And which way that market is going to go, if we look at price action really over the course of the last number of years, you would have done really well if you just adopted a buy the pullback type of strategy. You'd have to be patient in times, but ultimately it's prevailed. So there's still the conditions for that to absolutely be the case. And we're getting these markets just accelerating now again, as far as the pound's concerned. The difficulty is the markets have already moved. If there's any questions, guys, feel free to post them into the chat box. While we've got a few minutes now before that news release. The pound is just accelerating its move. Okay. Okay, so with this news out in just a moment, I'll see if there's any kind of further market updates. It's really about the pound, as you can see. It's just moved in a linear fashion since sort of pre-European Open. So 4 minutes to the news event, and we'll see what impact it has on the dollar, if any. It is sort of very minor data points. But it might be a little bit of a pivot for the dollar, or it might allow the dollar to just to find a little bit of support. We shall certainly wait and see. So that news event now is just a couple minutes away. Okay. Okay, okay, let's check out these numbers then. Okay, so let's have a look at these numbers. Okay, so actually more unemployment claims than was anticipated. 775,000 claims were expected. We saw 861, so that's a sizable uptick. I mean, the unemployment figures are a little bit sort of distorted really across the board. We're having strange non-farm payroll numbers and everything. So the all-important question is, elsewhere, is everything okay? Housing starts not quite as expected. Import prices has slightly increased on expectations. Contributing to that sort of inflation trade really. Building permits are much higher than what was forecast as well. So unemployment, little bit of a lag, but they are quite disjointed markets. The numbers for the employment situation in the US. So I'm just going to have a little quick flick across the dollar pairs. So we're just seeing prices just be held up as we go into this US Open. So just a day of kind of pullback positive price action really for the euro against the dollar. Pretty impressive price action to the upside for the pound. We're seeing the dollar sell off. Okay, we're seeing the yen strengthen as well. The Swiss franc, the Canadian dollar, the Aussie, and the Aussie and the New Zealand. So they're all strengthening and they're continuing to strengthen as well. Some are in consolidation. $77.16. So we're still in that sort of dollar strength phase, dollar weakness phase, should I say. So let's revert back to what's going on. So the pound dollar. So it's not an optimum time to be picking these trades right now. So crude oil has stopped its little slide to the downside. The S&P is just squeezing further lower. So we have a situation. Normally, there's a correlation between the US indice markets and the dollar. So if we had the indices pushing higher, we'd have the dollar selling off. If we had the indices pushing lower, we'll have the dollar strengthening. So we're seeing the US indice markets sell off, and what we'd ordinarily, certainly post-COVID, since last March, we've been seeing capital come out of equities and into the dollar pairs. So we would be expecting to see a little bit of dollar strength just off the back of the index trades, but obviously these markets don't necessarily need to perform as with these correlations on a daily basis. So they're a little bit upside down. They were a little bit upside down 2 days ago as well. So this is probably the kind of the new norm now for these markets, is that you can get sort of incoherent price moves, and it's probably needing to trade those kind of outlier moves. A market can remain illogical far longer than you or I can remain solvent. So there's a lesson in that. So we shouldn't necessarily be looking for logic. We should be looking to stack the odds in our favor as best we can. Just a little tip there for you. Hello Finbar, good afternoon. Have you been with us for the whole time? Finbar, have you just joined us? Good to have you tuning in. Are you still in that Euro 50 trade? Yeah, late to the party, no problem at all. Yeah, you missed it. Because it's, I'm just having a look at it now. It's just taking a little bit of a... Yeah, it's just taken that little roll over to the downside, isn't it? Last couple of days we were talking about filling that gap, and could it find a little bit of support? And the answer is unfortunately not. It couldn't find the support. So we're getting accelerated moves in the pound. So this is why it's a buy trade above the 147.50, because the market is kicking on a little bit, and if it can come back and create a bit of a floor, then that is that's a better trading opportunity. Okay. Okay, Bill Gates doesn't have any cash tied up in Bitcoin. I don't know if you'd be pleased to know that or not. You'll be able to find all the latest updates here at the live trade room. So the equity market's taking a firm little roll over to the downside. FTSE's taken a nice, we spoke about the FTSE there when it started to roll over two days ago to the downside. It might be an opportunity to be buying this around the 65.70 level or 65.77. So hopefully it'll squeeze a little bit lower. We get a little bit of indecision, and then we might take the next leg to the upside. So the equity markets are just having a little bit of a pause. We would like to be experiencing and seeing the dollar strengthen, and we're seeing some significant dollar weakness now today. So the question is, it's clearly clearing out a lot of the sellers that are in this market, and will these levels of resistance just sitting in here, will they hold, and or will we retrace the full extent, like we've seen here previously? So we had the very significant move lower. We marginally make a new low, and then we reverse, we retrace, and we break the previous day highs. So occupational hazard for these markets, I'm afraid. But so just to recap these trades then, guys, because we do need to wrap it up there, if that's okay. And a number of these markets are already extending themselves, like the pound trade basically. Let's stick crude oil up here. So this is our trade plan, looking for so we're still looking for this market, the euro dollar, to see if we can roll back below the 2061. The pound is continuing its move to the upside. The pound yen, same situation, and the euro pound to the downside. So we're seeing really nice moves across those trades. And really it's waiting now for the pullback. So getting a coherent pullback in the pound dollar, the dollar yen, and the euro pound would now at these extended levels actually be quite wise. So keep an eye on those three. We'll see if whether we get an opportunity today. I don't know, it's hard to tell. Maybe it's a case of looking to get into them tomorrow, so we'll keep a close eye on them. Ideally we'd like the euro dollar to just sort of hang around that 120.80 level. The longer that's the case, the more likelihood is we'll get a little bit of downward pressure. But so far it's a pretty poor day for the US dollar. And we have the S&P just trading down at these lows. So okay, guys. So look, what we'll do is we'll wrap it up there. We do need to sort of be patient, really. We don't want to get into these more recent high trades in the pound pairs. So unfortunately, we do need a constructive pullback to be able to get into them. And the euro dollar, we'll just monitor carefully. The dollar Swiss, of course, which is a trade we're already in. Oil and the euro pound, which is proving to be a great trade to the downside. And so we're breaking out this little range as well. So let's see what we get. So look, unfortunately, yeah, we do need to end the broadcast now at this stage, but we'll be obviously back again next week. Just during this sort of current sort of lockdown situation, we can only do these broadcasts Monday to Thursday. So Friday afternoon, we've got sort of a range of kind of one-to-ones and things like that with some of our traders. So we're unable to facilitate this on a Friday just right now, but that'll hopefully change. You know, in a couple of weeks' time when we start coming out of this lockdown type of situation. So, so for that reason, we look forward to seeing you again. If you can join us next week, Monday to Thursday at 12 noon. We'll see what opportunities we get, and we'll look to see if see what we can benefit from. So on that note, thank you as always for joining us. Let me get my main screen up on for you. Thank you for joining us. Let's see how we get on with these with the dollar. Let's see how that performs over the next few hours. And we want to hang in there regarding the crude oil, because we've got the inventory number, crude oil inventory numbers due out at 4 o'clock. So that's likely to be supportive of crude oil once more. So again, keep an eye on that trade. And the euro pound is just continuing its move. That momentum move to the downside. So far so good on that. So look, from everyone here at the live trade room, thank you very much for joining us. Please do feel free to subscribe, click the button, give us a thumbs up if you can, click the bell so you'll be notified when we do start going live. And we will be posting an awful lot of trading related content through our YouTube channel, hopefully from next week onwards. So you'll be notified when we put out all of those little videos as well. So we're looking forward to the coming weeks and months here on YouTube. So for more information, do go to our website www.thelivetraderoom.com. We're happy to answer any questions there. There's a chat function as well if you do want to ask any questions. You know, one of us will get back to you as soon as we possibly can. So on that note, take care. Have a great so look, have a great Friday and weekend, and we'll keep trading. So from everyone here, bye for now. Take care. Bye bye.